a lot of founders think that advisors are going to help them fundraise. And it's a bad move. It's like a clear no. Like, where's the founder? The founder should be pitching.
My guest today is Nikhil Choudhary, managing partner at Nirman Ventures, based in Silicon Valley. Nikhil is a founder turned investor with 2 decades of experience in construction industry. His previous startup was recognized as the #1 fastest growing design company in America, scaling over more than 100% year over year. Today, he invests in the future of energy, manufacturing, and logistics. In this episode, we talked openly about the common traits that found in successful founders, how to build and use an advisory board effectively, and the real challenges facing AI startups. I love this conversation because it's super rare and unfiltered. Let's just get started. Can you tell us more about your company and your role at the company?
Sure. I'm Nikhil Choudhary. Thank you, Austin, for inviting me here. I'm an entrepreneur in construction. I founded my own company in construction. I ran it as the CEO for 9 years and eventually moved into fund management, launched a VC firm. So at Nirman Ventures, I'm one of the partners here. We focus on global investments, early stage in traditional industries. By traditional industries, I mean construction, mining, logistics, industrial automation, energy. We focus on enterprise, SaaS, deep tech, robotics.
Sounds great. Well, definitely there's a lot of to unpack. When you say construction company, do you mean home building?
The first company that I founded was an engineering architecture services company. Never needed external capital. We were profitable from day one. And that's kind of one of the theses of our fund as well. We look for similar entrepreneurs that are not just looking to be venture backed for the sake of it, but also want to create robust businesses. And it's not just a one-off play for them. It's about leaving a legacy behind. So those are some of the traits that we try and look for in the entrepreneurs that we invest in.
What was the thinking behind choosing this vertical?
So one is when we did start the fund, we did not see many fund managers in our circuits that came along with grassroots company building experience.
Yes.
So there were fund managers that have built software companies, but when we talk about traditional industries, it's extremely hard to sell into these industries because a lot of times each project, for example, construction, has its own profit and loss P&L, and each project has its own balance sheet, and the margins are very, very thin. So that kind of became one of our secret sauces, that coming from within the industries, having sold within the industry, having run payroll for over a decade, we kind of understand certain nuances of how to get our entrepreneurs to the first product market fit, to get them the first design partner champion, and also to build a rounded product that's not just one and done, but that has cross-pollination potential once they get in with the customer.
Yeah, that makes sense. So this is your 3rd year running the fund, is it?
Yes, this is my 3rd year running the fund.
Okay, so looking back, has any of the core beliefs or assumptions changed since you launched it?
Actually, that's an interesting question. When we launched the fund, we were very focused on just construction. But as we moved along, we figured out that a robot that works on a construction field is also able to work on a mine. And it's actually easier for that robot to work in a static environment of a manufacturing facility. So we saw way more overlaps, and that's why we kind of expanded our thesis a little bit to not just focused on construction, but going into manufacturing or going into mining or logistics.
That's good to know. And what's the hardest part to get the fund off the ground? Is it capital, conviction, community, deal sourcing? What was I'm sure everything's hard, but like there's a harder part of the business.
Yeah, you said it. Everything is hard. I think launching a fund is nothing different than doing a startup. You have to wear different hats. You're initially a very lean team, but we wanted to be lean by choice because we felt that what is an early stage investment? It's a conviction on the founding team. And Most of the times, funds that are not able to make great deals happen is because a lot of conversations are lost within the hierarchy of a fund. So when a founder approaches a fund, the first gate of entry is through an analyst, and then
Yeah.
a second analyst call, and then a principal. And by the time it gets to the GP, most of the deals get funded already, and they've lost that opportunity.
Hmm.
So I think our belief system is we want it to be top heavy, bottom light. And
Hmm.
that's why we have just a couple of associates. But most of the deal vetting is done by our founders of the fund, our partners of the fund.
Yeah.
And that gives us like access to opportunities that we can move quickly into. Um, but coming back to your question, what has been the hardest? It's keeping up with changing environment. We're also in middle of an industrial revolution,
Right.
and I believe it's like greater than an industrial revolution. So, we've seen definition of an agentic solution, and there's data structuring that's happening, and there's a lot of plays that are going on. And I think just kind of keeping up with what's going to be the next great opportunity in the next 5 years and keeping track of everything that's moving so rapidly. That's kind of, I would say, has been the more challenging part and also the most fun part.
Yeah. Well, my personal experience, when I left the investment banking, I started to work on a mortgage AI agent. And we were supposed to automate a lot of the mortgage application parts so it reduces cost for the consumers. And it sounded great. But when we were doing the paperwork analysis, OpenAI and other large language models keep rolling out new features, and we feel the ground is moving as we were building. And then by the time that we have our new features, OpenAI has like a PDF, large PDF analysis already launched, and we were kind of months' work went away just to buy that feature launch. Eventually, we gave it up due to multiple reasons, including regulatory challenges. But that was a lesson that gives you the first-hand experience. Like, this is not going to be as easy as it seems to be, even though there seems to be a lot of opportunities, right? Is that what you see from your deal sourcing or like talking to founders as well?
Totally, totally in the same boat. That's why we've stayed away so far from investing in an agentic solution. It's not because we don't think that there will be winners in the agentic space. It's just that we still need some time to wrap our head around it. I think the space is moving so fast, and we were looking at this one deal, for example. It was a great deal led by a marquee investor, but they were in the market to raise at 2x valuation of what they raised the previous week. So
Wow.
it's, of course, we like to buy the brand, which fund manager does not, but we're also fiduciary duty to our LPs and to make a crisp investment, to make a very sound judgment when we're investing and not going in the fluff. We've kind of been keeping up with that.
Right. Because, the product changes a lot, the technology changes a lot, what you can do changes a lot. So it comes back to the core of backing the founder. And we've heard everybody talking about it. Everybody has different interpretation of it. What's your interpretation of that?
Totally. So the fund we're investing out of is a pre-seed seed fund. And
Uh-huh.
most of the times when we go in, there's very little revenues. And you said it, it's all about the founder conviction. And certain traits that we like to see in our founder that we back is leadership, persistence, influence, and, the grit. And I think a
Uh-huh.
lot of people discount that, but our team, having built companies in the past, we try to look for personalities that we had at that time when we were out in the market building our companies. Um,
Yeah.
that's like you're going to get a lot of no's. And I like to use this analogy of a cockroach. And, a
Uh-huh.
cockroach is like very hard to destroy. And
Yeah.
the cockroach founder is something that we love because it's like, you're going to hear no's, you're going to hear 99 no's, and you'll get one yes. But through those 99 no's, how do you still maintain uh, a good sounded brain and keep focused, right? As they say, it takes brains to run a business, but balls to start one. We're like big believers in that. I think a lot of times we miss out on EQ. I
Uh-huh.
feel that the importance of EQ is way more than IQ in founders. It's when they've started their company, they have lack of resources, they don't have much money to play with. How do they attract the best talent? How do they
Yeah.
create a world-class team? And it's a vision that the CEO or the core founder or the founding team has that can bring people along with them. So a lot of
Mm-hmm.
our work is spending time with those founders, early founders,
Mm-hmm.
and trying to get an understanding of how are they in a social setting? How are they able to communicate the message or the story to their potential team? How are they able to convey that they are the best product out there in this
Mm-hmm.
noise to their first customer? So we're kind of obsessed with founders that have strong social skills and a strong EQ.
That's definitely a unique angle. I think that that makes sense too. But how do you assess that? Like it feels like an interview a lot of times, which doesn't give you the best ability to assess this person in a bigger setting. What's your way of getting such information?
So we would
Uh-huh.
meet the founder over Zoom. We would spend some time. Then we would also get them networked within our extended LP network. And luckily for us, our LPs come from various facets of traditional industries. And we also have a lot of executives that are on our LP advisory board. So they help us. They help us give their assessment of what they think of the founders.
So there are two types of stereotypical founders. One that is, I'm going to support my team to do the best of their work and I'm going to be approachable that way, like a nice guy.
Yeah.
The other is really, you could say, Airbnb founder mode, which is like, I don't care what you think about me. I need you to get things done. And this is what I want. Get it done. Which one do you think is favorable to you?
If we have both personalities in our portfolio,
Yeah.
so I
Okay.
wouldn't pick one over the other. It's just what works for their business. Somehow, a lot of people that they attract in their teams, they like to be working with those kind of founders.
Mm.
So that's a soft skill. As long as they can take people along the right.
Yeah.
So I wouldn't be able to pick one or the other. We have
Okay.
both kinds in our
Both have
portfolio.
Both have chances. Okay.
But
Sounds good. So there's, as you said, there's like a 99 no's and one yeses. In the 99 no's, there are people, even though with good intention, are giving quote unquote fake no's. They just want to keep the door open. When you get to a certain stage, they may come back and reinvest in that business, right? Do you think founders should even listen to the feedback from VCs?
I have a little contrarian view on this.
Okay.
It might be controversial. So I think, and I tell all my founders the same thing. If someone has not put in the money, even if they are your advisors, so I make my founders ask their advisors to invest in the company. Because if they do not have skin in the game, they have nothing to do with giving you advice. Now, when it comes to pivot, yes, feedback is great. But when it comes to VCs giving feedback, I think most of it, a founder needs to take it with a grain of salt. If they're getting a collective feedback from many VCs saying the same thing,
Mm.
then they
Hmm.
got to take it seriously and, do a war room session and think about their strategy.
What do you think that advisory board do? Who should be on the board? How do you engage with them? Like a monthly calls or ad hoc questions? What is the best, most effective way?
Great question, by the way. I think advisory board is extremely important as the founders start their journey. So as a founder, early stage founder, what do they need? A founder
Yeah.
needs a legal support. A founder needs financial support to build their models. A founder needs a go-to-market expert. A founder needs, if they have, let's say, three subsectors that they are targeting, they need an expert in each of those three subsectors. So I would say a founder needs about 5 to 6 strong, robust advisors
Hmm.
in their first advisory board that they form. And I think
Yeah.
it should be a mix of what are their needs. So a smart founder can save raking up a lot of legal bills if they have a legal advisor on the advisory board. And then they can have, they can negotiate with them on the equity side of things. And we've also seen a lot of founders give away too much to advisors. And that They don't have vesting, they don't have a vesting schedule. So things like that that founders should be aware of. And what
Hmm.
is the need of the hour? What do they need right now? How can they be smart about forming their advisory board is so critical, so important.
Yeah, inevitably, advisors come in with good backgrounds. There's some signaling effect, right? Some people get tripped on it. Like they keep looking for the best, the biggest person.
You know how many times I look at the slide of the advisor page
Yeah,
that the founders have? Zero.
yeah. Okay,
Zero.
okay.
Like as an investor, we care less. The advisory board is for the founder to keep them sane, to keep them moving towards their goal, moving fast, and getting to their first product market fit. That's all it
Hmm.
is. Because after that,
Hmm.
after you've raised an institutional round, then you have a board of directors. Then you have your
Yeah,
investor who's put in most of the money in your last round. So at that stage, then you need friends, and then your advisory board that you initially created that turns into your sounding board. So
right.
after you go through those structured calls with your advisors, then it's like coming back to your what you said before. Then it's more ad hoc, and
Yeah,
those are your allies, and they're guiding you in the right spirit. That is this the right idea? Should you reinvent? Should you think about this? Um,
yeah. That's super helpful because that answers a very important question. Like the advisory board should actually be functional to the founders, not a presentation to impress people or put on the website just to show that, oh, I know so many people, right?
Totally,
That's,
totally. It
yeah.
it works. It works. You wouldn't believe how much some VCs do give weight to certain names. Some founders might have Altman on their board, and
Hmm.
yeah, that adds weight. We've seen that. We've seen that deck. It's just like we're not those VCs. We're disciplined investors. Just because a person is sitting on your advisory board, and how much time of the day do they have to give you? So
Exactly.
are you just buying the brand? But eventually, if we're putting in money in your company, then we're looking for growth.
Hmm.
What growth aspect is that advisor bringing to your company? So I think how founders should look at it is a clear definition of time commitment, a clear definition of scope. Yeah, without burning bridges, having those hard conversations with certain advisors that are not working for their vested equity and cutting them off. And
Yeah.
in a nice professional way, like, listen, this is a scope of work, you're not meeting it, I need to go and find some other advisor because I'm in my early stages of company building.
How should a founder reach out to a person? Should it be warm? Or should it be like LinkedIn outreach, cold outreach to get such a expert on your team?
I think founders should equally interview their advisors as much as the
Yeah.
advisor should interview the founders. So I feel LinkedIn outreach is great, and I think we're too stuck up with the warm intro part. And
Right.
I know it works, and a lot of VCs have a different thesis around it, that getting a warm intro to someone also is a measure of someone's network building capability. And
Yeah.
that's kind of the founder's first test. So
Yeah.
yes, if you have a warm network, but it's like if you find an advisor, so first you have to figure out what kind of advisors do you need. Pick 5 profiles that fit that
Hmm.
advisory role, and then you have second degree connections. It's
Yeah.
very easy to get warm intros. Just say like, hey, do you know this person? Can you intro me to this person? Or just
Right.
write to them. And most of the people you'll be surprised that people are very receptive. So I look at
Hmm.
each and every of my LinkedIn messages. If someone's like pitching to me without getting an understanding of what our fund does and what I have invested in, then they are unfortunately not getting any time in my calendar. But
Yeah.
if someone has done their research, people are receptive, and founders should not be shy to cold outreach their potential advisors. But it's a numbers game, right? So you interview 5 people for a role, and then you figure out, and not just move after one call, and figure out a dating period, and that could
Hmm.
be 30 days, and you do 6 calls and 5 calls and see how the advisor is working with you. And then you set
Yeah.
expectations, define a clear scope of work, and what are they going to do. And one more thing I would like to point out: a lot of founders think that advisors are going to help them fundraise,
Hmm.
and that majority of the times does not work.
Right.
They go and pick out a fundraising advisor. It's like, you should not start a company. If you want someone else to go fundraise for you, it's a bad move. If someone reaches out to me like, hey, I'm an advisor in this company, and the founder asks me to pitch to you, it's like a clear no. Like, where's the founder? The founder should be pitching.
That's very true, because you want the person that tells you the vision, right? You don't want the secondhand story, also potentially with their own interpretation,
Yeah,
right? And there's a sales quote saying, "Show me you know me." You have to show that you know who you are talking to, and then reach out, do that extra step, and you get much better results from that.
100%, 100%, 100%.
Yeah. Yeah. So beyond that, right? Like, so advisor aside, creating a startup or doing an emerging fund is actually an incredible lonely spot, right? I would love to have a school-like environment, seeing like all the classmates at the same stage, and we should just, study and then hang out after work. But it doesn't happen. Is there any kind of a circle or network that help you or help your founders to expand your network, or just be surrounded with the right people?
That's such a good question. One quote that I've been kind of following since I was very young is, the
Uh-huh.
bottom is always very crowded, but there's always room at the top. So you imagine
Right.
a founder's life, it's a pyramid, and you chose that path, and it is
Hmm.
lonely, but you also chose to move towards the top. And
Yeah.
it is lonely when you're building. You cannot show your weakness in front of your team members. And,
Hmm.
you've just lost a 2-month long conversation with a VC that was going to lead you around, and it happens on and on again, or you were banking on this one contract to come in that would get your ARR to $1 million,
Yeah.
and that contract did not come through. There's so many meetups, there's so many events. Austin, you and I being in the Bay Area, we know there are like 3 event invites every day.
Yeah.
And it's just going out there and trying to find that tribe that's going to be a support system for you, but also giving before asking. And so for a founder, how can you help your peers, and then start asking?
Yeah. Absolutely. Yeah. So let's change gear a little bit. That was incredible for how a founder should position themselves and how a founder should get helps and surrounded with the right people. I would love to know, like, from your company and the portfolio building, what's your thesis these days, especially you've been running the fund for a bit time.
Luckily, our portfolio construction has been very disciplined.
Mhm.
I can tell you about our robotics portfolio construction. So when we
Yeah.
wanted to start backing robotics within traditional sectors, we also wanted to keep in mind that there's no conflict within our portfolio founders, and it's more synergies than there is conflict. So how we built that out is, we've invested in a company that's a brain for robots. That also made the news recently. They raised at a $2 billion valuation. So, and then we've invested in a humanoid robotics company. So the brain could eventually work on the humanoid because it's a foundation model.
Right.
We invested in a drones company that's an
Okay.
autonomous GPS denied drones, but that's out of India. We have invested in an industrial automation company that does packaging, but does it like with accurate precision.
Hmm.
So as you build your portfolio, I think it's also important to that eventually the pieces of the puzzle fit together,
Yeah.
and they are not overlapping one another. One of our first fund investment, when we invested in them, they had a ARR of 60K.
Hmm.
They have a trailing ARR of close to $7 million right now. Uh, just like 2 years, just a little more than 2 years.
I think, to me, it feels like you are approaching portfolio construction as a craft. You put together the puzzles and hope everybody wins in your portfolio and you have a fantastic outcome. There's another way, which is the SoftBank way, which investing in all the same company in the same industry. And if any of them become successful, it's like 10 times, 100 times. And I lose 5 times, it's fine. Right. So, but I'm guaranteed almost to win as long as the category wins, which have a different philosophy, I guess, building a portfolio. I think both make sense. especially given the stage of the company. For your team, right? Like you manage the company as well, and you are a founder. How often do you sync up with your team?
So our GPs sync up every day. Uh,
Oh,
we,
okay.
we 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 have a brief call, even if it's like a
Yeah.
quick call. We do, almost every day if we are not traveling.
I like to have a few quick fire questions. Is there any one rule that you follow as a VC investor that you keep reminding yourself that to practice that rule?
That I was a founder first. I keep
Hmm.
myself. I keep myself grounded. Sometimes also to meet myself, I have to meet an old friend. You also have to. I think VCs. It's also an industry of a lot of posturing, and your feathers are fluffed a lot. You're going to
Yeah.
conferences, and all the founders are wanting some time with you. I think thinking of it as from a position of gratitude.
Yeah. That's wonderful. All right. What do you do outside work? Not meeting founders, not doing.
I travel a lot. I'm lucky to have a lot of friends all across the world. When you love what you do, there's like no set time off. But I do take time off to go hit the gym, go for a swim, work out. I think it's extremely important, even for founders. I think more for founders to take care of their health. Nothing in life is more important than your health, and you
Right.
take care of yourself, and you can take care of everything else.
Yeah, it's incredibly important. We're all sitting here for a long time every
Yeah.
day. And so, what resources or books or podcast, or it could be Twitter or anything that you always read every day or access every day?
So I read a bunch of news. I think a lot of people have gotten away from reading hardcover books. I've just the attention span these days of people is so short
Mhm.
that reading a physical book just takes you away from electronics.
Where can people find you, and what is the best way to find you?
Best way to find me, I'm an open networker, LinkedIn, Chaudhary_Nikhil on LinkedIn. I have my
Mhm.
email right there on my LinkedIn, so founders can always reach out to me. Happy to
Do you
accept.
actually read the every emails, or
I
do
read
they get to
every. I
spam?
read.
Okay,
I do
that's a
not
promise
have
to
my
the
EA
audience.
on my email. Yeah, totally. I read every email. So if I'm not responding to you, then it does not match my thesis. I do have to ghost sometimes, and I apologize, but it's just I'm inundated with emails. And if
I'm sure.
something is not a match for our focus, then it's just that I can't get to.
Awesome. Thank you so much, Nikhil, for the time, and really appreciate it.
Thank you, Austin. This is lovely. Thank you.